For decades, foreign investors entering Kenya have followed a familiar, exhausting path. Prove your capital, establish your business, renew your permits, and navigate a system built entirely around temporary approvals. But now, Kenya is considering a major shift. The government is exploring a golden visa-style residency program. It is a policy designed to trade immediate permanent residency for long-term foreign capital. Supporters say it could lock in foreign investment, anchor global venture funds, and cement Nairobi as the undisputed economic engine of East Africa. Critics warn it could accelerate inequality, drive up property prices, and give foreign capital too much leverage over local markets. So what is the truth about Kenya's proposed golden visa? Is this the next major step in Africa's high-stakes race for global capital, or a policy that creates more questions than answers? To understand what is actually happening, we have to separate internet outrage from policy reality. Despite headlines claiming Kenya is selling off passports, the proposal remains in an exploratory state led by John Mwendwa, chief executive of the Kenya Investment Authority, also known as Invest Kenya. Crucially, Invest Kenya promotes investment. It does not write immigration law. Enacting a golden visa requires Parliament to formally amend the Kenya Citizenship and Immigration Act. Right now, no formal bill has been enacted, no official investment thresholds have been published, and no specific sectors have been named. Under today's rules, if you are a foreign investor, you apply for a Class G permit. You must prove at least $100,000 in deployed capital, pay annual issuance fees, and submit to continuous administrative audits. The proposed golden visa bypasses that annual friction entirely. Instead of a temporary 1 to 2 year renewable permit, it aims to offer immediate permanent residency with a much higher capital threshold. It does not offer direct, instant citizenship. It offers long-term residency certainty. Why is Kenya floating this idea now? The short answer is global competition. Kenya isn't operating in a vacuum. Across the continent, a silent battle for mobile global wealth is underway. In neighboring Ethiopia, the government outlined plans for a 10-year golden visa program, targeting investment thresholds between $5 million and $10 million for top-tier investors. Down south, Mauritius and South Africa already operate streamlined residency by investment models to attract foreign wealth. According to ecosystem reports from Partech and Africa the Big Deal, Kenya's tech ecosystem pulled in roughly $1 billion in combined equity and debt funding, leading the entire African continent. Meanwhile, United Nations Conference on Trade and Development data reported total foreign direct investment inward flows into Kenya reaching $3.2 billion. Global venture capital firms run regional operations out of Nairobi, but top founders, fund managers, and multinational executives want jurisdictional predictability. They don't want their ability to oversee multi-million-dollar portfolios hanging on annual work permit renewals. This brings us to the core tension driving the public debate. Independent investment analysts point out that investor visas aren't inherently good or bad. Their impact depends on regulatory design. If capital flows exclusively into speculative real estate, you get asset bubbles and local displacement. But if the framework incentivizes greenfield manufacturing, infrastructure, and technology transfer, it creates a sustainable economic multiplier. Supporters argue that permanent residents don't just extract short-term profits. They build factories, launch regional headquarters, hire local workers, and pay taxes long-term. Permanent status anchors their balance sheets directly inside Kenya. Critics, however, raise valid warnings. If foreign capital enters real estate without strict controls, residential property prices in urban centers could soar, pricing out local families. Furthermore, if capital thresholds are set too low, heavily capitalized foreign firms could outcompete local small and medium businesses in domestic markets. As lawmakers and economic agencies evaluate future frameworks, Kenya stands at a critical crossroads. Will policymakers craft a golden visa with high entry thresholds, strict background checks, and sector ring-fencing that protects local assets while channeling capital into manufacturing and technology? Or will public pushback stall the initiative once again? One thing is clear. In the modern race for global wealth, standing still is not an option. Can Kenya attract global wealth without selling access to its future? What do you think? Is a golden visa the right move for Kenya's future, or does it carry too many risks? Let us know in the comments below. If you found this breakdown valuable, hit that like button, subscribe, and turn on notifications for more deep dives into global economics and strategic trade. Thanks for watching.